Well, hello there, everyone, following us live here or checking this one out later. This is Jeffrey Nance here, filling in for David Verbruggen. We have a little bit of a live trading update for you here on a Thursday, March 23rd, as we near the end of yet another month. Big move down yesterday in the S&P. I will show that to you here in just a second. And then what I would say is a bit of a surprising recovery today. In fact, the market is up pretty big today, which is probably kind of a bit of a shock to many of you. I'm going to go ahead and go out there and show you why I think that's happening, and then we'll go look and see at what is happening. So let's go look at the why first, and this will give us a pretty good idea of why they are so prone, guys. Just remember, these guys are just looking, right, hoping, anticipating just anything positive, anything they can possibly get that could even vaguely be construed as positive. They are latching on to that. And, this is happening once again. There's an article. It's still up here. So I'm going to see. Let me go ahead and share my screen with you guys. Let's make sure it's up there. Good. Okay. All right. So you can see here that I think the thing that they have latched onto today is this right here. And we'll look at a couple of these headlines here. The Federal Reserve now believes its work is nearly done. Nearly done? You talk about unfinished work. Wow. Inflation isn't even in the same country as their original target. And they're like, yeah, that's close enough. So apparently we have horseshoes, hand grenades, and the Fed's attempt to bring down inflation to 2%. we'll just toss it out there in the same category because they're not even close to that. But now they're like, we're good. It's close enough, which it's clearly not. It's not anywhere close to where they thought they would be. But raising 0.25% isn't going to make one bit of difference in inflation. I mean, small, but minimal difference. So it's not really going to do its job. U.S. futures up as Fed rate cut speculation rises. What? Fed rate cut? Well, they didn't say that. Why would they produce a headline that says that they're going to cut rates? They didn't say they were going to cut rates. They just said that they were going to stop raising them. But it's interesting. Why words matter. So when you start scrolling through and you start seeing headlines like this, like the work is done, they're focused on a rate cut. Is that what he said? Is that what they're doing? Well, let's go over there to the market. And what we're going to find here with the market is certainly they have bought into this ideology, right? So look at what the S&P is doing here. Okay. We're up 46 points. And when you look at this, let me go ahead and zoom in because I know this is sometimes hard to see on your screen there. But we're basically like, we opened it. It actually gapped up to open. Now, this isn't a major gap, but it's a small gap nonetheless. It gapped up to open, and we've climbed. I mean, we hit a high today of 4,007. 4,007. We closed yesterday at 39. We'll just call it 40 to make our math easy. That means we were up 60 points at the high today, basically back here, right where we were before this news announcement. So before the massive fall that came yesterday, we were right back there at the same point. Now they're kind of hovering back down here closer to the 50-day. But this is some wild stuff, and we really thought maybe the Fed was going to bring some clarity. It looked like it was yesterday in that last 30 minutes of trading. It looked like it was going to bring some clarity. Not so much today, guys. Today has just made it even trickier. So really hard to know what to make of this and really what we should do in light of that. So really kind of a a tricky thing here. I guess what we have to be aware of is latching on to those headlines, preparing ourselves, right, to basically 180. So we were ready to go bearish. We're like, okay, bearish it is. Let's go puts. Let's see this thing drop back down to, 39.15, 3900, maybe even as low as 3800, which have been a major area of support. So you're kind of getting geared up for that. And now all of a sudden you're like, wait a second, we're going up again. And that starts to at least become somewhat feasible opportunity here. Now, you guys might have noticed I popped in a line right here. This is my resistance line coming off of these highs, and I'm going to keep it for a while probably. Because I think it could end up being something that we want to watch. So if the market does recover, you're looking for two places really. Obviously, one is the high from Tuesday, which was also basically the same high as today. So, does the market really have enough momentum buying into those headlines, that belief, to carry past this? And if it does, then what does it look like? I mean, I think we're headed up here into the 40, 25, 40, yeah, we'll call it 40, 25 area. Now, what happens there? Does this line hold up? Does it act as resistance there? And if so, now we're going to be basically in a type of wedge. We'll have this diagonal resistance coming down, but all the EMAs will be underneath. And so basically we'll have a strong resistance line and some really strong EMA support. So which one is going to give way? So it'll end up getting stuck over here somewhere unless it just drops down. But I mean, it would, you would feel like there'd have to be a catalyst for that, given the news that we just had, which should have been a catalyst. And now they're ignoring that because they latched onto the phrases here that the Fed is done. Not, there shouldn't be, but if they are, that's interesting. And then they went so far as to say they're going to, start cutting rates. I know that's completely opposite and would basically admit failure to any inflation fight at all. They would just be giving up on that. So they're in an interesting place here. And as far as some opportunities, it's kind of interesting. So I wanted to go through a couple of stocks here with you. We looked at Pfizer. I really thought Pfizer was setting up really nicely for a bearish trade. And then, Wednesday and Thursday or Tuesday and Wednesday, it looked fantastic. Not so much today. Well, part of that is due to just, we talk about the S&P being, like a wave, like we're out on the ocean and the S&P is a wave, and then most stocks just go with the flow. Well, the flow is up today, so it's kind of hurting a trade like this where you look at it and go, man, this was set up really nicely to drop down to $39. Why is it not? Well, it's caught up in the potential for positive market tone, but it was a really nice looking trade. On the other hand, Vail was one that we looked at, and we talked about it dropping to 15.22, maybe as low as $15, and look at what it's doing today. So it's still headed down and looking really, really nice. 15.22 was a target. We had a low of 15.26. It's still dropping, so possibly we get there today. So even in the midst of positive market tone, this one is still doing quite well and has the potential to drop. So it's just so negative that it's still working. Well, it's pretty similar, right? Pfizer, Vail, they look pretty similar. This one's working. Pfizer is not so much today. And that happens sometimes, guys. It happens. So you could have been in both of those trades. One of them's making you money today. One of them is not. Now we looked at several trading opportunities. I want to point some of these out. Intel is a flag. There were some things I did not like about this flag dipping below the 10-day. Not a big fan of that. But today it's recovering. If the market tone really goes positive, then a move up to $30 is possible here. Maybe a little bit lower. Maybe it doesn't get quite that high, but it certainly looks pretty strong there. Then we had stocks like NVIDIA. And we talked about NVIDIA right back here on Monday night, going from here to there. Well, now it's above that resistance line. So even though it's not really exploding today, I say that, but it's, it's up $9 or more. But it's kind of stalled out here a little bit. It reached a high at 275. Now it's pulled back off of that high. But that was a trading opportunity we talked about on Monday night that's been, pretty phenomenal. And there are a couple of more that are like that. And what you guys have to do is avoid the temptation to get in. AMD, again, another flag, looked really nice here on Monday night. Completed its pattern, is still on the rise, looking really, really good. CRM was one that I liked. I thought it would get to 193. It stalled out. Of course, that was yesterday. Today, it's doing a little bit better. I'm kind of concerned about it getting to 193 because I think we're going to need some pretty sustained positive market tone. If we get it, I think it still might go there, but it's struggling a little bit. We got two more here. I'll cover Apple and Amazon. Apple was right here at a horizontal resistance line. It broke out of that horizontal resistance line and is continuing to climb. So it's been a really strong bullish trade. That one was a good selection this week as well. And then Amazon was making a nice flag here, and it's done pretty well. See, it's struggling a little bit today, but basically it's right here at the high. So it did what we thought it might do, and kind of was put you in a pretty good spot there. I think there was a couple of others. I think NVIDIA, we might have already talked about that one. Yeah, NVIDIA did just really well this week, and there were a couple more that did pretty well for us. So that's where we are today. Just kind of going back, let's just kind of give a look here at the S&P one more time. What are we looking for moving forward here? Well, let's see where we end. Does it close above the 50-day? That would be a pretty big deal. Where does it go tomorrow? Can it clear that high? Obviously, that's our next big area to watch. It's a really huge area that we're watching today. And really into tomorrow. And then once we get past that, then we have a pretty clear path up here into this line. And it'll give us a really good idea, possibly tomorrow or maybe even to next week, whether or not there's any real legitimacy to this line, whether we need to hold on to it or whether we just need to start looking at horizontal price points over here because the market's going to start climbing, for a few weeks, which is likely, I would say, once we break past this line. If we break past that line, then I think we're going to go bullish for several more weeks. We need to keep that in mind. Doesn't mean that it's going to go up every day, but overall, I would think we would look back a couple of weeks, ending off March, heading into April, in some pretty bullish territory there. All right. Well, that is our update for today. Hope that you guys enjoyed that time together here with us. If you do have any questions and you have access to us, go ahead and drop those either in our community sites or anywhere else where you would like to get access to us to clarify anything that you might have heard today. Thanks for being with us for this version of live trading. I know we'll see some of you guys here in just a couple of hours. And for the rest of you, thanks for being with us, and we will see you next time.